in the last class, and we are taking financial data analysis, the second very critical area of your exams. Predominantly, the examiner comes requirement 1, mostly on financial statement analysis, which was chapter 2. And also predominantly, he does more financial data analysis in requirement 2. Most of his past questions, you see most of the financial data he tests are always in chapter 3. So I'd like us to pay attention to these very critical chapters. If we can grasp these chapters as we did chapter 2, chapter 3, we'll be able to at least catch the significant area the examiner tests or comes with his exams for May diet. So even if we don't finish the 11 chapters, wherever we reach, at least if we've covered chapter 2, chapter 3, then maybe 4 and 5, with the time we have just few days to March, end of March, few days to end of April. And by the end of April, we should stop lectures so that we can concentrate on the pre-sin and also other papers for the exams. So we'll try to run through financial data analysis and ensure that we do a bit of justice to it, even though we may not take as much time as the one we spent on financial statement analysis, but it will take some few days to round up financial data analysis. So by way of the modules or the table of content, these are what we'll be looking at. The components of what we'll be looking at. We'll look at the purpose, then the introduction to financial data analysis, and what financial data analysis means. We also look at financial data analysis tools. We also look at performing accurate calculations in financial data analysis. Looking at evaluation of all skepticism, of all assumptions and professional skepticism. We're looking at the 7th module, flexing the numbers and sensitivity analysis. The 8th module, plausibility and numerical output. The 9th module, interpretation of results and reconciliations. The 10th module, making financial decisions, conclusions and recommendations. And the last module will be using financial data analysis in your case study exam. So by way of explaining what we'll be looking at, so the purpose of financial data analysis generally is to equip students, prospective chartered accountants, with the skills to analyze financial data effectively, access assumptions critically, and use analytical tools to derive meaningful insights for decision making in the case study exams. This is very important, and that's what the purpose is all about. And by way of introduction, we'll be looking at the financial data analysis as a systematic approach to evaluating numerical and financial information. So it helps us highlight the importance in identifying trends, assessing performance of companies, and making informed decisions in real-world business scenarios. This is very important. And chapter 2, looking at the meaning of financial data analysis, we'll be looking at the process of collecting, organizing, and evaluating financial information to understand a company's performance, identify areas for improvement, and make sound financial decisions. So the meaning culminates or helps us understand that very graphically. Also, the financial data analysis tools, we'll be looking at key tools such as variance analysis, sensitivity analysis, other tools generally that are non-structured data will enable us as professionals to analyze data effectively and draw actionable insights. This is very, very important. And the 4th module, performing accurate calculations in financial data analysis. We'll be looking at, in the context of the exams, emphasis will be placed on ensuring precision in calculations, as errors can flaw your interpretations, can lead to flawed interpretations. So this unit underscores the need to pay attention, or the need for attention to details, and and the validation of our numerical accuracy. It's very important. Evaluation of all skepticism. Under this model, we'll be looking at critical evaluation of assumptions used in financial data analysis. Is very essential because it ensures they are realistic and relevant. This session or this module focuses on assessing the validity of all assumptions in relation to data and the business context. Very important. Module 6, professional skepticism. We'll be looking at the questioning of data, the validity and reliability of financial and non-financial data, particularly when anomalies or inconsistencies arise. This module highlights the need for an inquisitive mindset, a questioning mindset to ensure objectivity and accuracy. Very important. Number 7, or module 7, will be flexing the numbers and sensitivity analysis, which involves evaluating financial scenarios under different assumptions, sensitivity analysis, that examines how changes in variables affect outcomes, helping to assess risk and uncertainty in decision making. Very, very critical. We'll also look at plausibility, module 8, plausibility and numerical output. Involves the emphasis will be on the importance of ensuring that numerical outputs align with real-world expectations and industry benchmarks, making the analysis we are performing credible and actionable. Very, very key. Also be looking at interpretation of results and reconciliation. Very important. And this area talks about analyzing and interpreting results that involves understanding the implications of our findings and reconciling discrepancies in data to ensure consistency and reliability in the analysis. Very key. And the last 2 modules, making financial decisions, conclusions, and recommendation, which is the crux of the matter. Very important. This module will focus on translating analysis into actionable recommendations and conclusion that aligns with the study or the organization's strategic objectives and financial goals. And finally, we'll be using financial data analysis in the case study exams. It normally comes predominantly in requirement 2. So we'll be using financial data analysis in the case study exams to help guide us on applying financial data analysis skills effectively during the exam, ensuring that we demonstrate analytical rigor and practical decision making. This is very important. So that's the 11 modules we'll be going through. We'll try to run fast, but also ensure we provide understanding. And after each unit or session that is a bit elaborate, we'll take a quiz to test our understanding of those units, like we've done in financial data analysis. We'll take 5 quiz, multiple choice question quiz to test our understanding to see if we grasp the subject. And the quiz, they kind of help us to also remember what we discussed. Okay, so we're looking at the purpose. By the end of the chapter, we should be able to understand the meaning and uses of financial data analysis in the case study exams. So, prospective chartered accountants should grasp this concept of financial data analysis, including its significance in evaluating business scenarios and making informed decisions. We should be able to, after this chapter, appreciate how data analysis serves as a foundation for solving case study problems, not just to pass the exams, but in real life scenarios, by uncovering trends, relationships, financial health indicators, critical to strategic recommendations. This is very important. So we also we should be able to carry out financial data analysis using various tools in the exams and also after the exams. So mastering essential tools and techniques like sensitivity analysis, we spoke about, MPVs, strategic management tools, performance management tools, prospective chartered accountants, you should be able to, you should be equipped to dissect financial and non-financial data and other relevant data sets, enabling you to perform precise calculations, valid assumptions, and meaningful insights critical to addressing exam requirements very effectively. And the last purpose is the conclusion. You're able to conclude and make recommendations based on the output of your financial data analysis or computations. This is very important, and that's the crux of the matter. After completing your calculations, your analysis, you should be able to evaluate your findings critically, interpret numerical outputs, and assess their implications. This skill involves synthesizing your results into actionable conclusions and making strategic recommendations that address the problem at hand or the case at hand in the exam, while demonstrating professional judgment, skepticism, and sound reasoning. So these competencies are important in the case study, or for you to excel in the case study exams, and also apply these financial and data analysis skills in professional practice, which is the crux of the matter. This is very important. So these are the three purposes of financial data analysis. So by way of introduction, I will look at Unit 1. If we don't have any questions, you must understand that chartered accountants are required to be capable of providing information and decision support to management. So that's our job. Our job is to provide information and decision support. So they make the decision, but we should support the decision by the data and the advice, our conclusions and recommendations provided at their fingertips. So operational and strategic context with a focus on linking costing and other management accounting techniques. So we will help them make those decisions with our very traditional accounting tasks we perform. So we are not just responsible for traditional accounting tasks, but are also required to demonstrate a comprehensive ability to provide information and decision support to management across operational and strategic levels. So you have medium managers, you have low managers, and you have strategic managers, those at the top. Our responsibility extends beyond just financial reporting or financial statements preparation. It encompasses, our role encompasses a deeper involvement in shaping the organization's overall strategic direction. This is very key, very, very key. So when we link costing, management accounting, and quantitative methods to critical success factors and the operational strategic objectives of the organization, so whether financial or operational or with a special purpose, our inputs are very invaluable, very important. So in this role, as chartered accountants, focused on linking various disciplines, costing, management accounting, quantitative methods, with the organization's critical success factors and strategic objectives. We include the organization's financial goals, which are in the budget, operational efficiency, sustainability, and achieving a broader social impact. We aligned financial data with these goals, and that is why chartered accountants help ensure that decisions are informed, impactful, and aligned with the organization's mission and vision. So we have all these at our fingertips. Our job is to support management with making very, very good decisions to move the organization forward. So in the case study exams, candidates are expected to be capable of analyzing financial and non-financial data and information also to support management decision. This is very critical. So aside what we looked at in financial statement analysis, financial data is also important for us. The ability to access operational challenges, measure performance, and propose solutions based on analytical reasoning is very critical. As candidates, we must also consider the broader implications of our recommendations to management, which includes potential risks, ethical considerations, and alignment with organizational strategy. So ultimately, the case study examination tests candidates' ability to act as a trusted advisor to management. This is very important. Someone who can interpret complex data, anticipate challenges, and contribute meaningfully and significantly to achieving both short-term, maybe within 1 month to 1 year, and long-term objective, 5 to 10 to 20 years organizational objectives. This is very, very important. And by way of introduction, that's what the financial data analysis is all about. So that will be the end of this short introduction. So let's go deeply into Unit 2. If I'm running fast, please feel free to interject. It's a discussive element, discussive session. Please engage. If I said something you don't understand or on the slides, please feel free to interject and get clarification. It's very important. Okay, so we'll be going to Unit 2, and after Unit 2, we'll be taking our short quiz. We're taking a short quiz after Unit 2, so pay attention and follow. All right, so we're looking at the meaning of financial data analysis in Unit 2. Now, financial data analysis can be ascribed or described as the identification and analysis of any financial data necessary to evaluate a financial issue in order to reach a decision. So they may not be structured like in the IFRS financial statements we prepare. They are unstructured data based on either marginal costing, budgets and variances, sensitivity analysis, or any financial data analysis tool. So we should be able to evaluate this input and their output based on the calculations we provide, evaluate them, and whatever financial issue it is that management or our client want us to resolve, we should be able to help them reach a decision based on the data provided, identified, and analyzed by us. So the data contains the process and the analytical tools which may be utilized in performing this analysis. Exactly. So financial data analysis have the tools, the processes, and the ways we should perform this analysis for our client. And it involves the ability to understand it, evaluate it, analyze it, and the information contained in a request concerning the financial data. So understanding is key. We must understand it because comprehensively evaluating these data and analyzing them, it's very important based on the request, especially as it comes in form of requirements in the exams, and then to present the results of the analysis in a very succinct, comprehensive, and concise way to our users or our audience. This is very important. So we need to understand it first, evaluate it, analyze it, perform calculations, then present it in a very comprehensive manner that whoever reads it will not see the technicalities, but see the very, very easy tasks we perform for them to make informed decisions. So financial data analysis involves understanding the company and taking cognizance of our audience. So are we talking to the board? Are we solving a problem for the board or for top management or for our boss? Whoever it is that receives the report must be very important, and we take cognizance of that person, the recipient of the report. So writing to the CEO of a client's business to point out the trend, for example, in forecasted sales, from information already provided to you as the analyst, is not financial analysis which could be worth receiving. Exactly. So to the CEO of a client business to point out the trend in financial analysis is not the information you should provide. So you shouldn't point out the trend. You should point out the trend for him to be able to make out decisions. So you've done your trend analysis, you've looked at the forecast. If there's an actual, you compare it with actual, and the information you provide comprehensively will help that client CEO to make a decision. This form of report is worth receiving when you have broken it into very, very decipherable chunks. Also writing to a non-financial audience and explaining the calculated difference between the potential cash flow and the potential contribution of a project is also very important. So this is an example of translating financial data analysis for decision making to your audience. It also includes an assessment of underlying assumptions in a succinct and understandable manner, which will be extremely good financial data analysis. So when you've done your calculations, and that is why it doesn't stop at calculations or analysis, it moves to writing, comprehensive writing, translating your numerical data to a financial story to be able to make them understand what everything about your analysis is, and that culminates in good financial data analysis. So therefore, communicating the output of your analysis, your calculations in an appropriate form together with the judgments, everything you've done and the discussion of findings, then you conclude and also make strategic recommendations that follow is very critical in good financial data analysis. So you've not really done your job if you don't conclude by stating the issue and making recommendations, solutions to the issue. Just the same way it is in the financial statement analysis, is the same way graphically it is, and the same format to follow for financial data analysis. So the process of financial data analysis involves, number one, you use appropriate analytical tools for task identification. For example, you are given a budget to analyze the budget, and you're also given an actual of what the company did in that particular year to analyze the difference between the budget and the actual. So you have a tool, which is the budget and the variance analysis, to analyze the data of the company. So that's the process, one of the process of financial data analysis. Number two, you use the budget and the variance, for example, to perform accurate calculations, analyzing the results with appropriate clear explanations based on the information and assumptions supplied. So a budget is provided to you with numbers. Variance analysis also the actual performance. So you're doing that to the actual performance, you're doing that to get the variance, whether favorable or unfavorable for the company. This is very, very key in performing your financial data analysis. Also, the third step is to evaluate all assumptions, flex the numbers given, and perform sensitivity analysis where necessary. So, for example, I've used the budget and actual scenario. So when you look at the assumptions of the budget and look at what they performed actually, you flex the numbers to get your variance analysis. Where is necessary, you perform sensitivity analysis, and after that you now interpret the results and also the reconciliations to reach a conclusion which forms a basis for recommendation. So based on the budget and actual analysis, like I used as the example, what is the variance? Is it favorable? Are they doing well, or are they doing lower than budget, or are they performing actually more than budget? So you interpret this result, reconcile the budget and the actual, conclude and provide actionable recommendations for management based on that. So that essentially budget and variance is one of the tools for performing financial data analysis. There are many other tools we'll be looking at intricately as we go into the course or into the module very proper. So this is the meaning of financial data analysis. Okay, so that will be the end of this unit 2 on the meaning of financial data analysis. Before we go into a short quiz, do we have any questions? I know Rufiat is not used to quiz. We do quizzes after some long, just to help us grasp the concept and also let it resonate with us. When we look at the quizzes, they are quite technical, but they refer mostly to what we've discussed or the lecture we've talked about in that particular unit. So any questions on the meaning of financial data analysis, so that we can look at these 5 quiz let me see if we really grasp the concept. So two of us on the call, any questions?
So I just joined back. So I left when you were listing the model.
Oh, okay. Sorry, your network kicked you out, right?
Apart from that, I needed to recharge again because I was having the 2 data.
Oh, okay. Sorry about that. All right. So where can I just go back briefly to?
I can just catch up with the quiz. I think it will serve as a summary for me.
Okay, fantastic. That's good. Fantastic. Okay, so we have A on the call and we have R on the call. All right. So let's look at the meaning. It's quite simple by the way of quiz. So the first one is, what is the primary goal of financial data analysis? A, to collect as much financial data as possible. B, to evaluate a financial issue and reach a decision. C, to create complex financial models. D, to generate financial reports without interpretation. What is the primary goal of financial data analysis?
B. To evaluate the financial issue.
Okay, A is picking B, R is picking B. Final answer. Final answer B. Okay. Rufiat, are you sure? Final answer?
Yes, B.
Okay. All right. So final answer B. Number 2. Which of the following is not considered good financial data analysis? A, explaining forecast sales trends to a CEO. B, presenting financial data in a clear and comprehensive manner. C, performing sensitivity analysis and evaluating assumptions. D, communicating findings appropriately with judgment and recommendations. Which of the following is not considered good financial data analysis? A, explaining forecast sales trends to a CEO. B, presenting financial data in a clear and comprehensive manner. C, performing sensitivity analysis and evaluating assumptions. D, communicating findings appropriately with judgments and recommendation. Okay, R is picking A. A, what are you picking?
Financial data analysis. You can forecast through finance. Well, C, performing sensitivity analysis and evaluating assumptions.
Okay, R picked A. A is picking C. Final answer C.
Yes.
Okay. Number 3, what is a key component of financial data analysis? A, avoiding the use of analytical tools. B, using appropriate analytical tools for the task. C, ignoring the intended audience. D, presenting financial data without explanations. What is a key component of financial data analysis? A, avoiding the use of analytical tools. B, using appropriate analytical tools for the task. C, ignoring the intended audience. D, presenting financial data without explanations.
B, using appropriate analytical tools for the task.
Okay, A is going for B. R, what are you going for?
B.
Okay, R is going for B too. Final answer B, B. All right, we'll see. Number 4, why is it important to consider the audience in financial data analysis? A, so the analysis can be tailored to their understanding. B, to impress them with complex calculations. C, because financial data is always self-explanatory. D, to make the report as lengthy as possible.
A.
Why is it important to consider the audience in financial data analysis? Okay, A is going for A. All right. So R, what's your pick?
A.
Okay, R is also going for A. Final answer A, both of them. Okay, we'll see. And finally, what is the final step in the financial data analysis process? A, gathering raw data. B, identifying financial trends. C, interpreting results and making recommendations. D, performing calculations without drawing conclusions. What is the final step in the financial data analysis process? Okay?
Interpreting results and making recommendations.
A picked C. All right. R, what's your pick?
C.
The R2 is picking C. It's like, R, you are just breaking your fast. Your mouth is moving. This is 8:45. You are just breaking your fast. That's late. All right, it's nice. So let's go. Judgment Day. Now let's go to the answers. Let's see. Number 1, what is the primary goal of financial data analysis? B. Wow, both of them got it. Good one. Okay, to evaluate a financial issue and reach a decision. Exactly. So the explanation, financial data analysis is conducted to assess financial issues and make informed decisions. Exactly. So both of you got it. And very good. Number 2, which of the following is not considered good financial data analysis? Answer is D. Explanation. This is not actually a key aspect of good financial analysis. So the word not in the question makes this the correct answer. How comes? A picked C, R picked A. How come you failed it? Which of the following is not considered good financial data analysis? So you guys picked the option for which of the following is good financial data analysis. You didn't look at the not. Because I can see A picking C is wrong and R is picking A. So the explanation is that this is actually a key aspect of good financial data analysis. Exactly. So the word not in the question makes this the correct answer. So communicating findings appropriately with judgment and recommendation is not considered good financial data analysis. Thank God that exam is not OBJ because the thing will be very, very confusing.
It will be both blood.
It will be confusing. So the answer is D. All right. Both of you failed it because of the not, but then that's not what ICAN will be asking you. All right. So number 3, what is a key component of financial data analysis? Yeah, B. So both of you got it. Using appropriate analytical tools for the task. Explanation. The correct use of tools helps in interpreting financial data accurately. Exactly. Okay. Number 4. Why is it important to consider the audience in financial data analysis? So the analysis can be tailored to their understanding. Exactly. The way financial insights are communicated should align with the audience knowledge level. Yes. Correct. So both of you got that. What is the final step in the financial data analysis process? Exactly. They both got it. C. Interpreting results and making recommendations. So after performing calculations and evaluating assumptions, the next step is to interpret findings and provide recommendations. Exactly. Okay, so 4/5, 80%. 4/5, 80%. Good. As long as you didn't score 100%, I'm okay. All right. Okay, so that will be the end. So this is 8:50. Do we go on a short break or we should look at financial data analysis tools before we go on break? Which one will you prefer? Unit 3 is financial data analysis tools. So do we go on a short 10 minutes break or we should continue and go on break by 9? Which one do you prefer?
We should go on break by 9.
Okay, let's go on break about 9. Rufiat, are you okay with that?
By 9.
Yes, let's continue.
Let's continue. Okay, that's fine then. All right. Okay, so let's look at financial data analysis tools, unit 3. The tools for financial data analysis in case study or the exam have been covered in other professional exam subjects. So like chapter 5 or chapter 6 is strategic management tools. And they include but not limited to the following, like forecasting and budgeting techniques. They are financial data analysis tools. So you will see past questions where he asks you to forecast for 5 years, 10 years, especially in requirement 2. Then you see where he provided budget and variance also. So budgeting and forecasting techniques are financial data analysis too. And we also have financial appraisals and reporting. Appraising a project, looking at whether they are feasible or not feasible. They have been tested severally in the requirement 2, mostly of the case study exams in its past editions. Also, another tool is Breakeven and Profit-Volume Analysis for pricing decisions. He frequently tests this in most of his diet. So you see Breakeven, Profit-Volume, CBP analysis, Profit-Volume analysis for pricing decisions. Also, another tool is product mix. You look at a product mix where a conglomerate is involved, they have different products, and you help them make profitability decision. Which products, which centers are good, are profitable, which ones are not profitable. Also, project appraisal, looking at maybe a make or buy decision, and also short term, maybe within 1 year, and long term, 5 to 10 years decisions, depending. So these are tools we use for financial data analysis. Also, risk in decision making. In making decisions, how do you factor in risk? Risk is generally looked at as danger, perceived danger. in short form. Risk means perceived danger in short form. Risk can also be opportunities or threats. So opportunities are to be explored and threats are to be mitigated. So in making your decisions to move forward, you have to take calculated risks. You also have systematic risks in the decisions you want to make. So these are tools for decision making, financial data analysis tools. And we have sensitivity analysis and also business valuation tools. We'll be looking at them as we go ahead. So this chapter will not cover the technical details of how to apply all these tools or the analytical tools. That knowledge is assumed, but some of the more important issues which should be considered in using each of them are considered below under the appropriate analytical tools heading. So some of them have been tested in our previous papers or even in our university days. If maybe we got exemption in management accounting, performance management, if you did it, and other quantitative techniques. Some of them have been tested there just to remember them. So some of them are looked at here under these appropriate headings. We'll be shortly looking at them as we move on in this financial data analysis module. So it's important to realize that in the case study exams, you are not always told which analytical tool to use. Sometimes he'll tell you which to use, but when you are not told, you can just use the one that resonates with you in that particular case to develop the required output. So where data is provided and no tool is given to you to use, you can come up with a tool that practically applies to that scenario graphically. So it's important you are conversant with this tool to be able to apply them in the case study exam. Though most of the times in his past editions, he will tell you the tool to use. Just one of few cases, he didn't provide a tool, so you need to come up with something to analyze. It's also important to realize that frequent need to use your judgment when making decisions about the analytical tools to employ is very important. So you will need to use your judgment when you've read through the case, which tool is appropriate for this situation I'm facing. So your judgment is very important, and the understanding of the tools also comes to bear. So you need to at least have operational knowledge of the tools generally. We'll be looking at them as we go ahead. As a result, in preparation for the case study exams, you also need to use each of the analytical tools provided in other ICAN study texts, like I said, performance management, QA, QT, and the tool that is appropriate in given situations. So anyone that comes to your mind after reading the case and you feel is appropriate in your judgment, please use the tool if you can apply all the components of that tool very graphically. So there is, however, a unifying element to financial data analysis in case study. So there's something common. That's what it means by unifying, which is that it tends to focus on a current issue and an imminent decision which will affect future operations. Exactly. So it has nothing to do with merely historical data. It may be something bedeviling the company at the moment. So you need to solve that issue or provide findings, conclusions, and recommendations, because it will affect the future of that company. Unlike financial statements that are historical data, and you want to use the historical data to provide results for now and predict the future. But this is a current issue, mostly in the case study exams, especially in requirement 2, and it's something you need to help solve them to provide a basis for decision making for management or the board. So the use of some of the above analytical tools is covered in this chapter, like financial forecasting, financial appraisal and reporting, break-even analysis, project appraisal, investment valuation and appraisal. So these are tools we can use in this data to help us make decisions or provide insightful recommendations for management to solve. Also, the use of sensitivity analysis, which is an overall technique to be applied in almost all financial data analysis instances, will be discussed. So sensitivity analysis is key. It's a pivotal tool we use in financial data analysis to simulate some scenarios We'll look at how to apply sensitivity analysis as we go on to help us analyze instances in our discussion. So in the case study exams, you'll be provided with information related to the matter to be addressed, which will require sifting. Sifting means you take the important and remove the unimportant. You analyze and evaluate that important data you've sifted within the context of the business scenario. So we are saying that it's not everything in the requirement 2 or financial data you need. What you need to make decision to calculate and write, because calculation earns you very low marks, but writing provides you more marks. So your calculation is the foundation for what you write. So you need to sift out what is unimportant so that you don't shoot blank bullets and write what is not necessary. So sifting is very key for candidates. You'll be able to sift. And as we're looking at our past questions, like this current mock exam on best price fashion has a lot of financial data in requirement 2. Requirement 1 is financial statement analysis. Exactly, you evaluate financial statement analysis. But requirement 2 of this current mock, you see some of this break-even analysis, you see MPV, you see high, medium, low method in the requirement 2. So that's a practical way of analyzing. You sift out what is important, analyze and evaluate within the context of the business scenario. So please look at mock exam 2. The financial data analysis is a bit pepperish, but that's what the examiner, that's a perfect example of what looks like or what the examiner will present in the real exam. So this means being fully aware of all surrounding business issues from the scenario as well as the wider context which might affect any possible appraisal and decision. This is very important. So based on your sifting and evaluation, you need to also understand the business issues surrounding what you're sifting and how it might affect your analysis, your appraisal that will culminate in decision making. So it's often necessary to consider incomplete information. And if this is the case, then you should make assumptions. That's why assumptions are allowed. If information is not provided completely, you should be able to make assumption in order to complete your calculation. So where data is not provided for you completely, please assume, freely assume, and go ahead. And so, for example, they didn't give you a hurdle rate for your NPV analysis and you're trying to calculate IRR. So you just assume maybe a 10% first hurdle rate and 15% second hurdle rate. Assumptions are allowed so that you can complete the case. So where you're giving IRR to calculate and there is no interpolation, if you're using the interpolation method, there is no hurdle rate. You can assume 10%, 15%, or 15%, 20% is allowed. Why? So that you can complete that calculation. So under no circumstance should you stop calculation to advise the client to provide more complete information. You cannot do that in the case study exams. So where you don't have complete information, make your assumptions and write. Don't write and say incomplete information the examiner or the client should provide. Don't do that. You'll be marked down. So the exam has the case study the financial data analysis tool has told you may encounter situations where you have incomplete data. So go ahead, make your assumptions and feel free to write. This is very important. It's a writing exams and not a calculation exam. So whatever you have at your fingertips, use it, make your assumptions and complete your writing, please, and pass your exams. So you are expected to demonstrate your professional skill by making sensible assumptions. So don't be wild. Don't go and use 30%, 40%. That's to some extent wild for interpolation. So 10, 15 is reasonable, which is generally used in textbooks and actual situations in the office. Make sure you use sensible assumptions and complete your work as fully as possible. So that's a brief on Unit 3, Financial Data Analysis Tools. It's nice to have, I saw her just coming now, Salmat. Nice to have you, Salmat, on the call. You're welcome.
Good evening, sir. Thank you. Good evening, everyone.
Good evening. How is the fasting? How is the fasting going at work and family, everything?
Well, we're doing our best. Thank you.
Fantastic. That's good to hear. So we are almost going on break. So we are looking at Unit 3 of our Financial Data Analysis module or chapter of the case study text. So we're going to take a short test on this before we go on break on Financial Data Analysis too. So I don't know if we have any questions on this Financial Data Analysis too. Okay, yes, please go ahead, please.
What are the tools? Just really. What are the tools?
Samat is just coming in. Okay, so by way of recap, we'll just run through the tools, but then you may need to go back to the video to look at it. So some of the tools here that we'll be looking at critically is forecasting and budgeting techniques. So that's one of the tools. So they are not general financial statements, but they are operational tools management use in their day-to-day activity. So we have forecasting, budgeting techniques, we have financial appraisal and reporting, exactly. So financial appraisals, reporting like the project appraisals, MPV, we have payback period, we have most of those tools they use to assess projects that are viable and not viable. We also have break-even, or those margin of safety, profit volume analysis, cost volume analysis for pricing decisions. So these are some of the tools. Then we have product mix and profitability decision. These are also tools. Then we have project appraisal, make or buy decision, where he integrates sometimes leases, IFRS 16, then short-term and long-term decision. Then we have risk in decision making, decision under certainty and uncertainty. We have situation analysis, decision tree, sensitivity analysis, and other business valuation models that generally we use. So in the past questions, you see that some of these tools have been tested and some have not been tested. So that's what generally entails or comes in requirement 2 of the case study exam. So those are some of the tools we'll be looking at anyway. We've not looked at them, but we are just introducing them in this unit. So you have an idea a bit of some of them, right? Hello, Salmat. You're muted if you're speaking. Okay, I hope she's not off. All right, so when you come on, so those are some of the tools. Then by way of quiz questions before we go on break, we'll just test if we understood what we looked at in this current unit. Okay, so we have Salmat on the call now. So let's go and see if we grasped the concept. I know she may have to just guess some of the answers, but I believe in answering them, we'll see the explanations and what they graphically mean. All right, so number 1, in the case study examinations, how are candidates expected to select analytical tools? A, by memorizing all financial formulas. B, by using every tool available for each question. C, by using their judgment based on the scenario provided. D, by asking the examiner which tool to use. In the ICAN, okay.
A and B.
Okay, in the ICAN case study examination, how are candidates expected to select analytical tools? So somebody said C. Is that Rufiat or A? Somebody chose C now.
By being C.
Okay, is
on the scenario provided.
Okay. A is picking C. All right, Rufiat, what are you picking?
I picked C.
Okay, Rufiat, R is picking C. All right, Salmat, I know you just came. You may need to pick one. What do you think is the answer?
I did not get the option A and B. I heard the C, and okay, it's showing now. I'm memorizing all financial by using.
Okay, so let me read it for you again. All right, are you sure? Let's go. In the case study examination, how are candidates expected to select analytical tools? A, by memorizing all financial formulas. B, by using every tool available for each question. C, by using their judgment based on the scenario provided. D, by asking the examiner which tool to use. If your screen is not toggling, just let me know.
Yeah, it's showing now.
Okay, fantastic. So what's your final pick?
C.
Okay, we're going for C. All right. Are you sure it's not B?
No.
Okay, she said no. All right, so everybody picks C. Okay, we'll see. Number 2, how come the answer was ticked here? This is wrong. So I'll just assume this is a bonus answer. Why did I tick the answer? No, this is wrong. What is the unifying element of financial data analysis in the case study exams? The answer shouldn't have been ticked. I guess it was during the preparation I mistakenly put it. Okay, so number 3, you guys have a bonus. Number 2, so which of the following is not explicitly listed as a financial data analysis tools in case study?
Human resources management techniques.
Oh, okay, A has already picked D. All right, Rufiat to D. I've not even read it. Okay, so Salma, what's your pick? Has your screen toggled?
D. Yes.
Okay,
Human
D.
resource management.
Okay, that's fine. All right, we'll see. Number 4, what should a candidate do if some financial information is incomplete in the case study exams? Stop the calculation and request more information.
No.
Make sensible assumptions and complete the work.
B.
Okay, B shows like they are really following. All right, everybody B. Final answer B.
Yes.
All right. Okay. And finally, why is it important to consider the wider business context when analyzing financial data in the case study? It helps memorize financial formulas. B, it ensures every question has only one correct answer. C, it affects financial appraisals and decision making. D, it allows candidates to avoid making assumptions. Why is it important to consider the wider business context when analyzing financial data in the case study?
C.
Okay, who said C, R or S?
R.
Okay, R said C. All right. So A and S, we are waiting for you. Why is it important to consider the wider context when analyzing financial data in the case study exams?
C.
Okay, A is picking C, S is also picking C. Final answer, C. Okay, so let's see if we got it. End of quick question and our answer. Number 1, C. Exactly. In the case study exams, how are candidates to select analytical tools? By using their judgment based on the scenarios provided. Exactly. The case study exams requires candidates to analyze a business situation and determine which analytical tool is most appropriate for decision making. Nice one. So number 2 is bonus. I already picked A for you people. So what is the unifying element of financial data analysis in the case study exams? It focuses on a current issue and an imminent decision affecting future operations. So financial data analysis in the case study revolves around evaluating a present situation to make informed decisions that will affect the future. That is right. Number 3. Okay, that's good. All of you guys got it. D. Which of the following is not explicitly listed as financial data analysis tool in the case study exams? Human resource management techniques. While human resource management is important in business, it is not directly considered a financial data analysis tool. Number 4, what should a candidate do if some financial information is incomplete in the case study exams? Make sensible assumptions and complete the work. Exactly. The exam expects candidates to demonstrate professional judgment by making logical assumptions where needed. Exactly. All right. Finally, why is it important to consider the wider business context when analyzing financial data in the case study? It affects financial appraisals and decision making. Wow, 100% understanding, everybody. That is good. Even Salman that is just coming scored 100%. Interesting. That's good. Even though I'm not comfortable you guys scoring 100%, but then it is what it is. Business context shapes the relevance of financial data and impacts decision outcomes. Okay, that's a good one. It shows we are understanding financial data analysis. So when we come back on our 10 minutes break, we'll come back 9:21. We'll look at financial forecasting and budgeting techniques in Unit 3, Section 1. This Unit 3 is going to be long because all those techniques are discussed here. Financial forecasting, budgeting techniques, all those techniques or the tools we looked at. So we have Section 1, we have Section 2, we have Section 3, like that. I think up to Section 9. So
Wow.
each sections have quizzes so that we can understand the tools graphically and how to apply them. Okay, so this is 9:12. We'll come back 9:22. Take our eyes off the screen, and if you have not